Hello students, welcome to Accounting 1304, Introduction to Accounting 2. This is Dr. Mercado with you today. And in today's lecture, we will be covering content from Chapter 19, which deals with accounting for partnerships. The problem that we're going to be covering is Problem 19-10A, which will be on your final exam, and which deals with preparing a statement of partnership liquidation with a loss. Like every week, a friendly reminder to please ensure to read the chapter before you attempt your assignments. 2 attempts are provided and the highest grade is retained. I encourage students to utilize both attempts to try not to only earn the most points possible, but to practice the content. The only way you learn accounting is by doing it. The more you do it, the better you get at it, okay? So let's dive into the problem. Let's see what data we have. So here we have, it says after several years of operations, the partnership of Nelson, Pope, and Williams is to be liquidated. After making closing entries on March the 31st, the following accounts remain open. And remember, the accounts that remain open are our permanent accounts. All of our temporary accounts are closed at the end of the period. So these are the permanent accounts that we have for this particular partnership. Okay, it says here that the non-cash assets are sold for $230,000. Profits and losses are shared equally. Okay. Our requirements: we are required to prepare a statement of partnership liquidation for the period of April 1st through the 15th, showing the following: the sale of the non-cash assets on April the 1st, the allocation of any gain or losses to the partners on April the 1st, the payment of the liabilities on April the 12th, and the distribution of cash to the partners on April the 15th. Once we are done with the statement of partnership liquidation, we are going to move on to completing requirement 2, which is to journalize these 4 transactions in a general journal. Okay, so I've already set up the statement of partnership liquidation. We have all of the columns that we need, and it's basically 1 column for each account that we have. We have cash, inventory, other assets, liabilities, and then the 3 capital accounts. Okay, so we'll go through this in a bit. But before we begin tackling the problem, let's do a quick overview of the liquidation of a partnership, okay? So it says here, when normal operations are discontinued in preparation for liquidation, adjusting and closing entries are made in the same manner as done at the end of the year. Thus, only the assets, liabilities, and partners' equity accounts remain open. Okay, liquidation of a partnership is generally completed in 4 basic steps, and the steps are outlined below. Step number 1, the assets are sold. Step number 2, any gains and losses are allocated to the partners. Step number 3, liabilities are paid with the money that you got from the sale of your assets. Okay. Step number 4, any remaining cash or other assets are distributed to the partners. Okay. As the assets are sold, the cash realized is applied first to the claims of creditors. Once all liabilities are paid, the remaining cash or any other assets are distributed to the partners according to their ownership interests as indicated by their capital accounts. Now, your textbook does an excellent job in providing you with examples. They provide you a completed statement of partnership liquidation with a loss. And it shows you how step 1 and 2, 3 and 4 are applied towards the statement. And then it also shows you the 4 journal entries that have to be made based on the 4 steps that we're going to be completing. Okay, so when I hear students tell me, Miss, I am lost, I have no idea what to do, that only tells me one thing: the student has not opened the chapter and has not read it. Okay, because the textbook does a fabulous job in explaining the majority of the content. Okay, there's so many resources. We have the chapter readings, we have the lectures that I record for you, you have the PowerPoint presentations, you have the show me how videos. You have a lot of resources that you can use to complete your assignments. But in order to do that, students need to invest time and effort in trying to understand the content. Okay, now we're going to go ahead and apply these 4 steps towards the completion of the statement of partnership liquidation. Okay, so we're going to start off with the beginning balance. before anything happens, okay? The balance before the sale of the accounts, okay? What are we starting off with, okay? And what we're going to do is we're just going to transfer the information from our chart of accounts to the statement of partnership liquidation, okay? So what are we going to do? We're just going to copy and paste. I've got 15,000 in cash, 40,000 in inventory, 220,000 in other assets, 75,000 in liabilities, 40,000 in capital for Nelson, 60,000 in capital for Pope, okay? 60,000 in capital for Pope, and then we have 100,000 in capital for Williams, okay? So all I have done here is just copy and pasted the information from the chart of accounts provided, okay? Now step number 1, we're going to sell our assets, and according to the problem we are going to sell the non-cash assets, okay? And we're selling those assets for $230,000, okay? So remember that, $230,000. So my non-cash assets are my inventory and my other assets. Those are my non-cash assets, okay? So I am selling my assets for $230,000. That is how much cash I am going to receive. I'm going to subtract the 40,000 for the inventory, and I'm going to subtract the 220,000 for my other assets. That means I am going to have a loss of $30,000. And we have a loss because we are selling the assets for less than what they're worth. So remember, I'm selling my assets for $230,000 and my assets are worth $260,000. If you add these two together, it gives you $260,000. So we have a loss of $30,000. So let's complete step number 1, the sale of the non-cash assets, okay? So because we are selling them, I am going to reduce my inventory balance by 40,000. I'm going to reduce my 220,000 other assets balance by 220 because I'm selling these assets, okay? How much cash did I receive for these assets? I got $230,000 in cash, okay? That is step number 1. Step number 1, the assets are sold, okay? That is step number 1. So what did I sell? I sold my inventory and my other assets, okay? I sold those 2 items, so now it's gone. How much did I sell them for? Well, I received cash of $230,000, okay? Now we're going to go to step number 2. We have to record any gains or losses allocated to the partner. So we have to allocate. Did we make a gain or did we make a loss? Well, we've already identified that we have a loss of $30,000, right? And you know, we already figured out $30,000 loss because we sold our goods for $230,000 or our assets at $230,000 and they were worth $260,000, okay? So we have a $30,000 loss. Now the problem states profits and losses are shared equally, okay? So that means that we're going to go ahead and we're going to assign a $10,000 loss to each of my partners, okay? So we're going to go ahead and we're going to have a $10,000 loss here for Nelson, a $10,000 loss for Pope, and a $10,000 loss for Williams, okay? So now that I've recorded step number 2, I can go ahead and I'm going to calculate my balance after the sale. So your balance after the sale is equal to your balance before the sale of assets plus the sale of non-cash assets and allocation of loss, okay? You're going to add those two together and it'll give you your total. Now, I am using Excel, so I'm just going to copy the formula. That way I don't, do it one by one just to save time. Once you enter the formula on the first cell, there's a little box right here on the right corner. Just grab that box and move your cursor to the end and voila, you've got your ending balances. Okay, so it's been updated. So if you see, your inventory and your other assets have been zeroed because those assets have been sold. Okay, so now at this point in time, what we have is we have $245,000 in cash, $75,000 in liabilities, which is our debt, and then we have a capital balance of $30,000 for Nelson, $50,000 for Pope, and $90,000 for Williams. Okay, so that is what's happening after step 1 and step 2. Okay. Now we're going to go to step 3. Step 3 is liabilities are paid. So with the money that we received from the sale of our assets, we're going to use that to pay off our creditors, any debt that we have. Okay. How much debt do we have? We have liabilities of $75,000. So we're going to have a payment of liabilities. So I'm going to clear out my liabilities by making a payment, okay, of $75,000. And how am I going to pay? So my liabilities are going to decrease by $75,000. How am I going to pay for my liabilities? Well, you're going to pay with cash. So your cash is going to also decrease by $75,000. Okay, so your cash decreases, your liabilities decrease. So step number 3, pay off your liabilities. After we're done that, we're going to calculate a total again. Okay, we're going to get our balance after the sale, okay, the $245,000 plus our payments of liabilities, and that will give me my ending balance as of that point. So that is the balance after the payment of liabilities. Once again, my formula has been entered on that cell. I'm just going to drag my formula to the rest of the cells. And now we see what's happening. Okay. So now we have liabilities here. Okay. So now your liabilities have been zeroed out. Okay. So we've zeroed out our assets. We've zeroed out our liabilities. Everything is zeroed. So as of step number 3, we are left with $170,000 in cash, and we have our capital accounts. Okay. Now we're going to go back and we're going to do step number 4. Step 4 is the remaining cash or other assets are distributed to the partners. So now we can go ahead and we can give the partners their portion. Okay. So we're going to get the $170,000 that we have, and we're going to give it to the partners. So I'm going to go ahead and I'm going to decrease my cash by $170,000. Okay. And then if we add these 3 amounts together, let's get that calculator. We've got $30,000 for Nelson, $50,000 for Pope, and $90,000 for Williams. That gives me my $170,000 cash distribution. Okay. So we're going to go ahead and we're going to pay out the money to the different partners, the 3 partners. Okay. So we're going to give cash to each of them. So we're going to zero out our capital accounts. And we're going to give them a check. Okay. So I am going to close out my capital accounts and I'm going to give them the cash. I'm going to write them a check. Now I am going to calculate my final balance. Okay. So the final balance is your balance after the payment of liabilities plus the distribution of cash to partners. Okay, and that'll give me 0. Once I've entered my formula, I'm going to click the little corner and drag it along. Okay, and if you see here, the formula is the same. You're always going to get the balance after payment of liabilities plus the distribution of cash to partners. Okay, so the formula automatically adapts to the information as you transfer it over. So now in step number 4, my capital accounts have been zeroed out. Okay. So step 1, you zero out your non-cash assets. Step number 2, you distribute the loss or gain to your partners. Step 3, you close your liabilities. Step 4, you distribute your cash to your partners. Okay. At the end, your final balance should be all zeros. All of your accounts should have a 0 balance. Okay. So now we've already done everything that we need to do. The 4 steps have been completed. Okay. Now the second requirement is to do the journal entries, the 4 journal entries. Okay. So let's go back to the problem, and it says the sale of the non-cash assets took place on April the 1st. So we're going to be doing 4 separate entries. Okay. So we're going to do April the 1st. What happened April the 1st? We sold our non-cash assets. Okay. So what did we receive when we made this sale? Well, you received money. You got cash. How much cash did we get? And we look here, we got $230,000 of cash. So we're always going to look under the cash column. How much did you sell them for? For $230,000. So we sold our assets for $230,000. Okay. Now, did we have a gain or did we have a loss? Well, we identified we had a loss of $30,000 that was distributed to the 3 partners. Okay, so we have a loss. So we have to record the loss on sale of assets. Oh my God, I cannot spell. Here we go. So we have a loss of $30,000. Okay. So we have a loss. Now we have to clear out our asset accounts. Okay. Our inventory needs to be zeroed out. So what happened to my inventory account? Inventory is an asset with a normal balance of a debit. So if I want to zero it out, I would need to credit my inventory account by the $40,000. Okay. Then we have other assets. Other assets is also an asset account with a normal balance of a debit. If I want to zero it out, I am going to credit it to 20. Okay. So here we have the entry. Make sure that your debits go first, your credits follow, and make sure that your debits equal your credits at all time. Because I am using Excel, I'm just going to do a quick check. I want to make sure that my debits equal my credits. Okay, just to be on the safe side, because you never know. Maybe you're off or you did a typo. It happens to me all the time. I do a typo, and you see here my debits equal my credits, so I'm good. Okay, so I'm going to delete that. So that happened April the 1st. That is the entry to record, and I'm going to put it here, sale of assets. Okay, so that happened on April the 1st. We're going to go back to the instructions, and on April the 1st, we also allocated the gain or loss to the partners. So now remember, we assigned a $10,000 loss to each of my partners, where we're going to record that. And that also happened on April the 1st. Okay, so what happened on April the 1st? Our capital accounts decreased. Okay, the normal balance of my capital account is a credit. So because we had a loss, we're going to go ahead and debit to decrease the balance. Okay, so we're going to have here Nelson Capital. Okay, we're going to have Pope Capital, and we're going to have Williams Capital. Okay, my 3 capital accounts, and all of my 3 capital accounts got distributed a $10,000 loss. Okay, 10,000. So we're going to put that on the debit side for all 3, because each of them got 10,000. And I did a typo here. 10,000. Okay. Okay. And now I am going to offset that against the loss on sale of assets. Okay. $30,000. Okay. And then this is going to be the allocation of the loss. That is step number 2. Now step number 3, or journal entry number 3, it says we're going to record the payment of the liabilities on April the 12th. So now we're looking at April the 12th. April the 12th. Okay. And April the 12th, we paid our liabilities. Okay. So my liabilities have a normal balance of a credit. Okay. If I want to zero them out, I would need to debit my liabilities. This is where knowing your normal balances of the accounts is very important. Okay, and we should know the normal balances of the accounts from Introduction to Accounting 1. If you don't know your normal balances of your account, that's something that you really need to strive to know, because we're going to be using that in all of the accounting courses. So liabilities have a normal balance of a credit. To zero it out, we would need to debit, and the amount of my liabilities is $75,000. Okay. So we have 75,000 liabilities. We debited our liabilities. How do we pay for our liabilities? With cash. Okay, cash gets credited 75,000. Okay. Here we're going to put payment of liabilities. Okay. So that is step number 3. Okay. And then number 4, the distribution of cash to the partners happened on April the 15th. Okay, April the 15th. So April the 15th. Okay, so we distributed the capital to, we distributed the cash, to our partners. So what we did is we zeroed out each of the capital accounts. Okay, we zeroed them out. So they no longer have a balance in the books. Those were zeroed out. So what happened is we zeroed out the capital accounts and we send them a check. We cut them a check. Okay, so we're going to go ahead and we are going to debit Nelson. And then we have Pope Capital. And we have Williams Capital. Okay. So remember, when we want to increase our capital, we credit. When we want to decrease our capital accounts, we debit. So we're going to be decreasing all of our capital accounts to 0. So we're going to debit it by the amount of the cash distribution. And these are the amounts. We've got $30,000 capital balance for Nelson, $50,000 capital balance for Pope, and $90,000 capital balance for Williams. Okay. With that entry, I am zeroing out my 3 capital accounts. Now, what's going to happen? I'm going to give them some cash. Obviously, you're not going to give them cash. You're going to probably give them a check or a direct deposit or whatever the case might be. Okay. But cash is the account that's going to be affected by the total of $170,000. So by doing this, my 3 capital accounts get zeroed out. My cash gets zeroed out as well. Okay. And this entry is the distribution of cash to partners. Okay. So these are the 4 entries, 1 for each step. Okay. So if you go to your book, the steps are outlined and you have specific, you have an example of the journal entries and you have an example of the statement of partnership. Now this is for a loss. Your textbook also illustrates one for a gain. So you have both examples provided on your ebook. Okay, but the steps are the same. It just depends. Like for example, here we distributed the loss. If there's a gain, then the gain would be distributed here. It would be a positive number. Okay, so that is the end of this problem. We completed the statement of partnership liquidation. All of our balances on all of our accounts are 0, and then we do the 4 journal entries, 1 for each step. Now when I'm done, I like to make sure that my debits equal my credits, because if not, we're gonna have some problemas. Okay, so let's go ahead and do that. Okay, so we have 535,000 debit and 535,000 credit. So we are in balance. We are good. Okay, I can delete that now so we don't confuse you. So that is it for this problem. Please ensure to complete your assignments by the established deadline. Do not leave your assignments for Sunday at 10 p.m. please. Okay, please work on your assignments during the week. That way, if you have any questions or concerns, you can reach out to me Monday through Friday. Please look at my course syllabus to make sure that you are aware of my office hours. If you message me on the weekend, I will not guarantee that I will respond to you. Okay, that is why I have my office hours during the week. That's my time to be available to you. Okay, so that is it for Chapter 19 lecture. Hope you have a wonderful rest of your day, and until next time, bye-bye.